Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Here we are getting ready to kick off some of the biggest names in the earnings season over the next few weeks, and all of the momentum of the stock market is just leaking everywhere. As I look at this on the middle of the day on Tuesday, you've got the NASDAQ is down minus 3.10%. This is a 1-month graph of the NASDAQ here on Seeking Alpha, and you can see it's been melting down big time over the past 30 days. Here we've got the S&P 500 that is down almost 2% today. And what's interesting about S&P 500 is you've got oil stocks in there, you've got consumer staple stocks in there, things that some folks would say is the safe place to be in a market like this, but there's no relief. If you have S&P 500 right now, there's no relief to this negative environment that we're seeing. And Dow Jones, the big companies, right? Here's April for the Dow Jones. You just stuck to the big 30 companies, 1.4% down today. And back on, March, you were at 35,000. And today you're into the 33,000. So that's where we are right now, right in the middle of a negative swirl that continues to get pounded into us by the mass media, by social media, you name it. It's easy to find negativity. It's much harder to find any positivity in this market. So this quick video, I'm just going to give you 3 things that, at least from where my mind sits, 3 ways to look at this, 3 ways to think about this environment that may help you navigate it on your own. I'll kick off these 3 perspectives with what I think is really the most important thing to do if you're investing right now. In these economic conditions, you have to pick a side. You need to pick a side. Are you a buyer? Are you a seller? I suppose you could be a holder too, but either way, you're interested in buying stocks right now or you're not interested, and you need to pick that side for yourself, because if you're not interested in this economic environment, then it's just easier to walk away. Just easier to turn off the websites, turn off the television, and go live your life till you feel the market is on more stable ground at a point where you're comfortable with. On the flip side of that, and this is where I stand, I am interested in buying in this type of environment. I'm a long-term investor, so I'm coming into a market like this where everyone else is crying, and my interest has peaked, frankly, for the first time in 12 or 18 months. And it's with that intrigue, that desire to look at the deals that are available right now that leads me into point number 2. And point number 2 for stock market investors is just knowing you don't have to win it all today. You're probably not going to win it all today. But if you're a long-term investor, I think it makes sense to play some of your cards. That doesn't mean selling everything else you own and piling it into the stock market. It just means making comfortable contributions into whatever you think is the best risk-reward right now. Now, for me, the best risk reward in the market right now is probably the QQQ in terms of immediate risk, which is, let's just say, high, as we see this continue to play out. But in the long-term reward and the concept of where technology is going as we look ahead to the future, to me, it's a no-brainer to buy into QQQ right now, avoid some of the single stock risks in case we see companies go out of business or just really, land the plane in a bad spot. The Q has the powers of 100 companies, and almost certainly 60 to 70% of them at the bare minimum are going to be alive and well 5 to 10 years from now. But even outside of my opinion on the NASDAQ, what about the S&P 500 right now as we're looking at this one? This has a 1-month chart. Let's just flip it to year to date, okay? Year to date, here's where you were at, 4,700. Now you're down to 4,200, okay? S&P 500 gives you a nice balance. We talked about that already. I find it really odd when I see some of the commentary on the market today that some of the most bearish people wouldn't even consider buying a share of the S&P 500 right now. They wouldn't buy a share of VOO right now because they're so bearish and they think that the world is going to collapse. I think that's silly. I do not think that you need to pile all of your money into it. But if you don't think that the S&P 500 is going to recover from this line over the next year or perhaps even sooner, then you simply haven't learned enough about investing, and you simply haven't learned enough about how America's economy and how consumer spending work over the long run. All right, my third and final call out here is know that there are going to be winners in this stretch, whether this downturn continues on for 30 days, 60 days, 90 days, whatever. So my personal opinion, there'll be enough winners that the QQQ makes a lot of sense right now. But from an individual stock basis, and I'm going to bring up the TSA checkpoint travel numbers, which give you an idea of who's traveling in the United States, and it gives a nice comparison over the last 3 or 4 years. So kind of random stat here, but let's just look at 421, 2.2 million people. In 2021, 1.5 million people crossed through TSA checkpoints. And then obviously during the pandemic, very few. 2019, it was 2.5 million. 2022, it's 2.2 million. So this is an example, an easy example in the travel industry of the difference between this year, last year, and 3 years ago. And the key here is when you increase the number of travelers by roughly 750,000 for one day, you have to think about the incremental spending that is going on in this country based purely on these numbers alone. And this is not just vacations, right? So I get it on travel stocks. Obviously, airlines are a unique play right now. This is business travel as well. So when you think about the visas and the Ubers and the rental car agencies, all these companies, by this number alone, across all of April, March, you name it, there is plenty more consumer and business spending going on now than there was only a year ago, and it is across multiple categories. So keep that in mind when you're reading negative headlines and you start to feel overwhelmed by some of the opinions that are going on about interest rates and the Fed and the short-term pain, right? The long-term gain is already happening. Now, yes, the China lockdown, of course it's going to hurt certain stocks. Of course it might hurt Apple, right, who has a big presence there. But there are going to be stock market winners that are happy as clams right now with the things that are happening in the American economy. All right, guys, so those are my 3 things. That's my rant for today while the stock market is melting down, heading into earnings when they could potentially come back sour and the market could melt down even more. Number 1, pick a side, okay? You have to pick a side. And if your side is full on bear, go walk away. Turn off the computer, turn off the TV, go enjoy your life. Don't come out and watch this stuff go down and with the I told you so type attitude, right? Go do something healthy and bright for yourself. Number 2, keep in mind, this is a long-term game. You don't have to buy today with the expectation that you're going to double up tomorrow. You are buying, particularly if you're under the age of probably 55 years old, to be honest with you, you are buying to set yourself up for the long term. And you can buy as little as 1 share. Hell, they have fractional share type programs out there right now. Just get in the game at least to average down, assuming point number 1, you can handle being a little bullish when everybody's laughing at you. And finally, number 3, no matter how negative the stock market looks in general, there are going to be winners. There are going to be big winners during this time. Now, single stock, it can be difficult, and you have to do your research, and nobody can guarantee you a victory. I'm putting my bets on the QQQ, but we obviously looked at some TSA numbers. It feels like, maybe travel's coming back in the game big time. And then looking for the extra components of travel and business travel, whether it's Visa, Uber, just to name some basic ideas. Maybe it's restaurants. Only you're going to know the stocks that fit your risk profile. But the bottom line is there are winners out there, and don't let anyone tell you otherwise. All right, guys, that's all I got for today. Hope you enjoyed this quick little update on my perspective on today's market, which is bleeding out. I'm sticking in, not selling anything, and I am adding to my positions all the way down, trying to do it in more or less a fractional manner, a dollar cost average manner. And I feel good about it because I don't need to sell any of them tomorrow. Thanks as always, guys, for watching. Hope you enjoyed this update. If you're interested in learning more about Seeking Alpha, which was the website I had up earlier, my affiliate link is in the description, gives you a special price on a 1-year deal to Seeking Alpha Premium. Hope everybody's having a good day, and we'll see you on the next video.